Nike earnings are out, and Sarah Eisen has the numbers for us. Hi, Sarah.
Hi, Morgan. Well, there were some low expectations here that Nike seems to be surpassing. Revenues better than expected, $11.3 billion. And that marks a decline of about 9%, but the street was looking for more like down 11%. So that was better. A big earnings beat, 54 cents per share, was much better than the estimate at 29 cents per share, though margins were kind of soft to inline, 41.5 to 41.8%, which was the expected. Digging through some of the key markets here, North America, the home market, important, and also a beat at $4.8 billion. But China was a little bit soft, down 15% in China, in the greater China during the quarter. That is a disappointment. And I can tell you, after speaking to Matt Friend, the CFO, the China market is being reset. They are cleaning up inventory and making shelf space for some of the new styles. That's pretty much the story with Nike overall this quarter and where they are right now. The win now strategy, that's what the new CEO, Elliott Hill, is talking about. In my conversation with Friend, we are expecting guidance to come during the call, but it's only going to be fourth quarter guidance, not the full year guidance. And it will incorporate the new tariffs, the 20% increase of tariffs on Chinese goods. Remember, they make a lot of the sneakers and products in China. One sign I just want to share with you from the conversation, it's anecdotal, but I think it's important here because the numbers matter less in such a sort of dramatic turnaround. And that is the company is starting to see orders from wholesalers for performance categories and new sportswear almost fully offset the weaker sneaker declines in terms of these new orders. That is what they see as a leading indicator and some proof that they're seeing some early results, Morgan and John, when it comes to new products, some brand heat, some buzz. They had their first Super Bowl ad in decades, and the Peg Premium, for instance, is sold out. Starting to see some early results, and that might matter more to the street this quarter than usual.
Some great color. Sarah Eisen, thank you.
Thank you.
Shares of Nike up 4% right now. Well, joining us now with a reaction to those results is Oppenheimer senior equity analyst Brian Nagel. Brian, what a difference 24 hours makes. It's great to have you back. We were just talking about this yesterday, so I'm going to start right there. Your takeaway from these results we just got.
Yeah, look, nice seeing you again. Look, I think Sarah said it very well. That the real key here is this was a low expectation quarter. So these numbers, while they're slightly better than maybe the street forecasts, they're not reflective of a true healthy Nike. But again, they're against a low expectation backdrop. And really right now, we're seeing the stock here pop a bit after market. I think the key is, things did not get worse. And maybe we're starting to see some early signs of progress in this very significant turnaround that's happening in Nike.
Yeah, the commentary about new orders offsetting declines got my attention for sure. But the weakness that they consider to see in China and this idea of a quote-unquote reset, how important is that right now, especially in the context of trade dynamics and tariffs, which sound like they're going to start to get factored into guidance here?
Well, look, Nike in total, the whole company is a work in progress at this point, right? I mean, they've been resetting merchandising everywhere, including the United States. So when I heard, when Sarah said that for China, I mean, on the positive side, it tells me that, look, they're addressing issues in China as well. Now, China is very, very difficult to assess, especially for an analyst sitting here in the United States. What we've heard lately is, there's some pickup in China consumer demand. There's some stimulus effort on part of the government there. That's all positive. The negative, again, I think what you're alluding to, we just don't know. We have this trade war brewing, and that could very well at some juncture impact demand for U.S. goods in foreign countries like China. I don't think we've seen that yet, but that's definitely a risk out there.
Brian, it seems to me like if you're an investor, the important parts here are those wholesaler relationships mendable in the nearer term, and is Nike's innovation factory going to come back perhaps sooner than some might have expected? Are those the kinds of things that we really need to listen for to see if Nike management to start to lay out the benchmarks to measure their improvement and get that trust and valuation back?
No, John, that's exactly right. I mean, I'm going to say the same thing you said. I mean, the absolute two most important factors here are, one, product innovation. I mean, Nike's got to get back on its game of developing high-quality products that consumers want. And the second is, like you're saying, repair these wholesale relationships. I mean, Nike made a big mistake, as have other chains, going too far into digital. But again, I met recently with the company's new CEO, Elliott Hill. he's all about this. I mean, these were his two big messages: bring product innovation back, reestablish these relationships with key wholesale partners. I was on Academy Sports, a smaller sporting goods chain here in the United States. I was on their conference call earlier today. They're talking, what they're really excited about in their business is they're getting the Jordan brand and they're getting more Nike product here in the next several quarters. So, there's a big retailer in the United States, very excited about what they're seeing from Nike. So, but I think that's exactly what has to happen here.